So hello and welcome to After Hours by RedCompass Labs, where the best and brightest of the financial services industry let their hair down, unbutton their collars, and share their passion for payments. I'm Mike Truter, Director of Digital Ecosystems and Innovation at RedCompass Labs. And in each episode, I'm joined by my friend and colleague, Julie Getter. Let's kick things off. We are thrilled to welcome Andrew Davies as our special guest today. Andrew is Vice President of Global Market Strategy for Financial Crime Risk Management Solutions at Fiserv, a global leader in payments and fintech. Over the course of his extensive career, he's worked with a wide variety of banks and financial institutions, including regulators. Well, this is supposed to be an after-hours chat, but with Andrew in New York, Julie in France, and myself in Singapore, it's more like a before, during, and after-hours chat across 3 continents today. Andrew, are you a coffee or tea drinker? Do you have something to...
I think because my heritage is someone from the UK, I really should say tea drinker, but I've actually, during the pandemic, I've been becoming a bit more of a coffee drinker. And in my local neighborhood here in New York, I've been going to different coffee shops and rating them. So I guess at this point, I'm a coffee drinker, but don't tell any of my family in the UK.
Fair enough, fair enough. And Central Perk is nowhere close. Just
not too far.
And Julie, you're in France, so I guess it's acceptable to have a glass of wine with lunch?
Indeed, it is. But, well, today I'm going to be more British than French and just stay with the tea.
Fair enough, fair enough. Okay, let's get down to business then. The format is simple. Normally, to add a bit of spice and spontaneity, Julie and I won't yet know the topic. However, today we have a special financial crime episode, although Andrew still has the freedom to roam around through this extensive topic without any script or preparation. So let's see where the conversation takes us. As always, there's only one rule, like the Scottish knife, the ski and do. We need to try and keep things short, sharp, and to the point. So, Andrew, let me ask. Studies estimate that less than 1% of global illicit financial flows are detected and investigated. But why is this when banks are investing so much in detecting financial crime within their payment flows?
Yeah, this is a staggering number, and you're right. And the amount of money that's been invested in detecting these payment flows over the last 15, 20 years has been staggering. I think we're now realizing, and this goes to something actually that RedCompass has been doing, and that's providing information to this ecosystem of financial institutions to improve what we do today. So historically, what's happened here is we started off with simple rules-based systems. We then had more expert systems, but we're now realizing that in order to inhibit those financial flows, those illicit financial flows, we need to use more contemporary technology that reacts at the speed of financial services and then uses the global information, like, for example, what you're doing with your sort of red flags, sort of indicators, making that available to the industry. So sharing information, using technology that can leverage that information to more effectively fight financial crime. The regulators it's something that the regulators are talking about. We need to be more effective so that we're doing better than the 0.1%.
Yeah, I think it's interesting what you mentioned, Nando, because I was reading a study recently around obviously the budget spent on financial crime and the increase with COVID-19, estimated somewhere at least being 20%, creating a 20% increase on budget. And yet when you look at, what is the cost within this budget, it's usually more than 50% goes to operations. And actually, human being trying to detect financial crime. And I think, again, the issue with COVID is it increased financial crime all in all. And as a result, it increased the false positive as well. So it increased, the workload for operations too. So indeed, I think for me, the technology is the way forward. Because we cannot carry on adding operation and they cannot cope with the workload again. So I think it totally makes sense on this point, but it's interesting to see that, again, 50% of the cost is operation. So I feel like banks are at the beginning of this journey. What do you think on this, like around the uptake of technology?
Well, absolutely. And it's a fascinating point, because I think I was doing some research recently for some to look at the amount of money that's spent by North American financial institutions on managing just their AML program. So just part of their financial crime risk management program. And I think the number on average, the average spend from a financial institution in the United States, and this obviously this goes from big to large, is around $19 million annually on their AML program alone. Now, what that, and of course, the large financial institutions are spending billions of dollars. So this goes across the full spectrum of financial institutions. And what that indicates, much of that money, as you say, is spent on having large teams of people doing remediation of suspicious activity alerts, for example. And the problem is they end up being, to your point, almost alert disposition engines, if you like. So they're basically saying, okay, let me deal with this mundane false positive because it's always presented to me. What we need to do is use technology so we can focus those experts in those financial institutions on that which is legitimately suspicious, rather than dealing with false positives. So I think that's something where technology and data and indicators like your red flag indicators can feed into that whole process. And then what you render to the financial investigators is actually something that's useful for them to look at, so they can focus on fighting financial crime rather than just disposing of alerts. Some of the numbers are staggering. Let's say you're a retail bank in Poland, for example. Retail bank in Poland, you may have 350 investigators looking at your AML alerts. Clearly, that's not an effective use of resources. So if we can use technology, data, and then indicators and typologies, known typologies, to more effectively generate alerts, I think that's going to be something that's, will be hugely impactful. And to come back to Mike's point, will help us increase that percentage of financial crime that we actually detect and stop.
Maybe I can pick up again on that kind of percentage point. So, if we look around, we think about the regulations as well that are coming. The US has the US Anti-Money Laundering Act of 2020, or the 6 AMLD, the Anti-Money Laundering Directive in Europe. They're supposed to be changing the game. But will those, together with the what we've just been discussing on the technology side, get us from 1 to 10%? And if not, what else is needed to achieve the real step change to change the tide against financial crime?
One thing I would just want to say, just before we I talk about that specific question, is we talk about percentages, we talk about false positives, we talk about illicit money flows. The thing that's important, that I know that something that's important to Julie and RedCompass as a whole, is these aren't victimless crimes.
Yeah.
Right. Last year at the opening plenary for the Financial Action Task Force on Money Laundering, they had a great mantra: stop money laundering, save lives. Yeah. So I think that the reason I mention that in this context is that should be enough of a motivation for us all to try and materially increase that 0.1%. I think the most recent legislation, the AML Act of 2020, AMLD 6, I think the regulators are focused on the right things, achieving a material impact and increase in that money that's detected. I think in isolation, though, as you say, the legislation is good. I really like some of the, in AMLD 6, the way we're looking at other definition of more broadly of predicate crimes. Right, so it's not just money laundering is something that I can watch a movie on Netflix and there's some sort of like casual criminal who's doing something sort of fun with money laundering. Well, money laundering is the process of taking the proceeds of terrible acts. Right? Exactly, human trafficking, drug trafficking, sexual exploitation of children. Those are terrible crimes. And I think that the legislation is a good step. I think it will increase that 0.1 to 0.2%. I think, if you can aspire to something like 5%, it's a, orders of magnitude improvement. But what will really help us get there, and some of this is manifested in the legislation here in the United States, particularly with the whistleblower provisions in the Act. But what will help us more is collaboration in the industry. sharing data, sharing typologies, and that's what I was sort of inspired recently with what you've been doing. Sharing information, collaborating will help us materially impact those percentages.
And I think for me, like, the collaboration that you mentioned is all the more so critical that it's falling a bit like, the banking industry trend. So in the past, if I take my grandparents, for example, they used to have a single bank account. My parents, 2 or 3. I have so many, and then depending on like the banking and the transaction situation, I use one of them. So if the bank stick to, I'm only using my data, then they don't have a 360 view of actually my activity. So yes, I could be a good customer for, I don't know, HSBC, which is one of my banks, but actually using my Revolut or Monzo account to do like, all my dodgy thing in the background. So, I mean, for me, like really, the data needs to be aggregated so that like, as a bank, you have a full view of your customer and not only like the account you provide to,
absolutely. That's absolutely critical to get that holistic view. And I think that's where you really sort of achieve what Michael was sort of like talking about there, that absolute material impact on the amount of money that's laundered through the financial system and the amount of fraud that occurs.
But, like one thought I had like recently and do on this is thinking of open banking, right? And some of the FIs that you have like that are already aggregating the data in one single place and being in the position where they can tell me, okay, this is your financial health and so on. Do you think that the next evolution of their services would be actually entering a bit the financial crime space and considering they already have all the data, or do you think they will always kind of stay away from this because it's very heavy regulated market? It's at the end of the day, it's a human life, so you kind of need to be very careful of what you're doing. What is your opinion on that?
I think they will enter into the market. I think absolutely. If you're an organization hosting a lot of systems for financial institutions, I think it's almost tantalizing. You've got the data. You can now leverage the value of that data to provide additional services to your financial institutions. And one of those services will be financial crime risk mitigation. And I think that can help us all in the industry. It sort of goes to that collaboration point. And one of the reasons, I often talk about in this particular subject, the 3 dimensions of financial crime risk. Why, if you're an institution, should you do these things? Well, you have your compliance obligations. You have your reputational risk. But then most of these organizations, and I think people in general, really support the moral imperative, the notion of doing the right thing. Yeah. So I think if you've got that data, if you've got these customers, then let's collaborate and let's see what we can do to materially reduce financial crime. And just one other perspective on that, if you look at, I was recently reading a study that talked about the top reasons why an individual selects a financial institution, or like you and I, Julie, why we select many financial institutions. The number 1 reason is customer experience. In order to have a good customer experience, for me, my generation, I need a couple of things. I need security. I want my customer experience to reinforce the fact that my financial wherewithal is secure. Now, of course, I do also want to have seamless transactions. So when I'm doing, I know something that you and I have talked about a lot, the evolution of payments sort of feeds into this as well. When I go to my local florist on 57th Street and pay with my DDA account through Zelle or through Venmo or something like that, I want to know that that is a secure payment. So that customer experience for me is very important in how I'm selecting a financial institution. Then the second most important reason why someone chooses a financial institution is a concern about security. So I want a good customer experience, I want good security, and then the third is the nature of the products. You can see if we can do accurate detection of financial crime, we can have a good customer experience, and we can reinforce that desire for security, and we can offer those services around all of our products. So it's something that it's almost a win-win to try and sort of like seek that holy grail that Michael mentioned, which is reducing financial crime.
And I think for me, like, as time goes, there is almost a third criteria that I'm seeing more and more for any type of institution being chosen. And that's the notion of value. What basically, like, you going, what are your value, and so on. Like, and it's big. I think there's been an increase on that with COVID, and Generation Z is like all about value. They don't have the concept of loyalty at all. Almost, they look at value first, right? And I think for me, like, you know, like you said at the beginning, combating financial crime, at the end of the day, it's saving lives. So there is, like, you know, this notion of like, yeah, moral obligation and value at the end. So I
yeah,
think
and I think
that important.
Yeah, and that notion of value in Generation Z and millennials is so important, because one thing that I often talk about as a sort of like, you know, an introduction to this subject of the nature of the transient nature of financial relationships at this point is, there was an article in the Times in London a few years ago that talked about if someone of my generation was more likely to change their spouse than their bank account. Now, because we're all dealing remotely, because we all want to get more value from our financial institutions and from our money, people are much more mobile. They'll move financial institutions much more quickly. And I think that's a trend, and we have to, you know, manage financial crime risk in that context.
Yeah, that's interesting. Interesting point. But can I come back a little bit, step back? We spoke about like telephone number size amounts that banks are spending, and you know, there's lots of things to tackle, thinking about those kind of predicate crimes and so on. But if we think about maybe, Andrew, your clients, the Fiserv clients, you know, by number are really, the majority are small and medium banks. How do they, you know, take on these kind of specialist financial crime issues like modern slavery and human trafficking or child sexual exploitations when they don't have the size and scale of you know, the big techs and the big banks?
What I found with, so even if you're a small financial institution, you know, a Fiserv core banking customer, you've generally got experts managing the financial crime capabilities. So it may be a small team, but they're incredibly well informed about their customer base and what their customers do. So what I've found with them, and I've been quite inspired by this group of our customers, is they'll leverage our technology in ways that we didn't think that they were going to deploy the technology. So we'll maybe deploy a solution for US regulatory reporting, and then they'll say, okay, well, I can tweak this to look at elder abuse or human trafficking specifically. So they'll try and leverage the tools as best they can to service those particular risks, because, you know, as we said, it's important for them to support the moral imperative, but their reputational risk and their compliance obligation. So they've been trying to, and they will even go beyond the technology that we've deployed to create, you know, special reports, special queries, looking at different types of data to try and uncover these red flags that could be indicative of these other financial crimes. So you know, they're not empowered as much. You know, they don't have 250 data scientists that the large institutions will have, but what they do have is expertise and an understanding of their customer base. Now, I think it does mean that I wish there was a mechanism where they could sort of inform other financial institutions around what they're doing and what red flags they're seeing, which is why I sort of like the whole initiative that, and really this was the starting point of, you know, Julie and I sort of talking about these subjects, you know, having that shared set of red flags across the industry. Everyone should be able to contribute to that list of red flags.
It's fantastic to hear that, you know, that even those smaller companies are innovating and taking it seriously, right? They believe in changing the world, you know, even if it's one small step at a time, and leveraging what they have at their hands to do so, right? So I'm inspired to hear that as well. So thanks for sharing. I think
for me as well, like it's interesting to see, like, obviously sometimes within smaller institutions, the incentives are not the same. So, and I think, to be fair, like the incentive put in place are also contributing to, like, you know, investment being made and so on, right? Because if basically your incentive is based on a risk-based approach, then your number one priority would be to be compliant, and rightly so. I mean, we all human at the end of the day, right? I think when you move to a different kind of incentive, where actually your driver is to save a life as opposed to comply, then it completely switch the table around, right? And the way like what you're willing to do. And often we actually say that as RedCompass, that with scarcity come creativity as well, or something around this line. So I feel like with the right driver, actually you go the extra mile. So I'm not so surprised by what you're mentioning, Andrew.
Yeah, I do like that perspective. So one of the things that I will try and do when I'm speaking to any of our customers is talk to them about, if you're working at a small financial institution in Kansas, for example, you're seeing these alerts. How do you relate those alerts to the bigger picture, which I think is what you're talking about? How do you make sure that you understand, it's not just, you're not just, doing 3 alerts today. You're doing investigations that could lead to the prosecution of some of these criminals, right? If you're filing a suspicious activity report. So I will often talk about not only technology, but talk about statistics like, the International Labour Organization says there's 40 million people trafficked every year, 75% women, 25% children. The proceeds of that human trafficking needs to be laundered through the financial system. What you're doing, Mr. Banker, is investigating is really the starting point of these investigations to try and stop this activity. Because if you can't launder the money through the system, then you're not going to be trafficking people, right? I mean, you need to turn the proceeds of those crimes into some legitimate asset. So I do think it's important that we raise the awareness around why it's important to manage these financial crimes and to manage this financial crime risk beyond just a compliance obligation.
Yeah, it's fantastic. You're having real impact on real people's lives, and there's a greater good than ticking a box. I think. Yeah, fantastic. I think that's all we've got time for. But fantastic discussion, Andrew. Thank you for joining us today. It's been an absolute pleasure having your insight on such an important topic, and as we mentioned, one that has such a direct impact on the daily lives of so many people. Combat financial crime, save lives. I think a very important point for us to remember.
Yeah, you're most welcome. It's a delight to. I've been inspired by Julie and RedCompass and what you're doing, so I'm absolutely delighted to participate. I appreciate it.
Thank you. Yeah. I'm going to reinforce our mission at RedCompass Labs is definitely twofold. One of our jobs is to help payments flow and lubricate the growth of the economy and promote financial inclusion, while also disrupting financial crimes. We see them as two sides of the same coin, and that's also why we provide advanced AI, data-led financial crime testing technology and data analytical services, and the Red Flag Accelerator that you mentioned. Those typologies that help banks and hopefully save lives, eventually stop people from using banking services to abuse children or buy and sell people. That at the end of the day is why we do it. We also really appreciate the support of our audience. If you've enjoyed this discussion, then please show us your support by giving us a thumbs up, hitting subscribe, and clicking on the bell to get notified when new content arrives in future. Also, please don't be shy about giving us feedback. We really appreciate your comments and suggestions for new topics and guests. That's all for this week. Catch you on the flip side.